In 2022, you would think the main real estate story would be about mortgage rates. And I understand why. However, the real story in 2022 is about inflation. Because high inflation drives mortgage rates upward. I truly believe that in 2023, the real estate story will be a rinse and repeat of 2022. Yes, the developing story for 2023 will be all about inflation and mortgage rates. Before I start digging into inflation and mortgage rates, let me share that the primary purpose of this podcast series is to inform, entertain, and educate. The information, opinions, recommendations presented in this podcast does not constitute legal or other professional advice, opinions, or endorsements of any kind. Welcome to the Martini Mortgage Podcast, episode 168, Inflation and Mortgage Rates. My name is Kevin Martini. I'm a certified mortgage advisor and producing branch manager, NMLS 143962, with the Martini Mortgage Group at Gold Star Mortgage Financial Group Corporation, NMLS 3446, Equal Housing Lender. Wow, let's dig in. Mortgage rates have been tracked for over 50 years, and I have not been able to find a period of time in recorded history where mortgage rates have performed like they have performed this year. In 2022, the average 30-year fixed mortgage rate has doubled. How insane is that, folks? 2022 has given us the fastest increase in mortgage rates rise in recorded history, and this is courtesy of inflation. This is not a thesis. This is a fact. Inflation is the reason for the rise of mortgage rates, period. As a primer, mortgage rates live in the bond market. With a bond, there is price and there is yield. It's critical to know that price and yield have an inverse relationship, and that is a very important point. What do I mean? Well, in the simplest form, as the price of a bond goes down, the yield of the bond goes up. And when the price of a bond goes up, its yield goes down. In 2022, mortgage bond price has gone down, and the yield has gone up. And when yield goes up, home loan rates go up. The rise of yield with mortgage bonds results in higher home loan rates. And this rise is caused by inflation, since inflation erodes the return of a bond. Holy cow, that was boring, but it's important to know because the higher rates in 2022 have been caused by inflation. Here is the punchline. Lower inflation will create lower mortgage rates. And the Federal Reserve is working very hard to get the evil inflation under control. And that will be a little bit of a challenge they're having, but they will get that challenge done. I have found that the Fed is always late to the party, and they stayed too late to the party. Let me unpack what I just said. The Fed was late taking action on the rise of inflation because they thought that inflation was transitory, not sticky. Now, if you're a longtime listener to the Martini Mortgage Podcast, you know that I was screaming that inflation was sticky, but sadly, the Fed did not listen to me. Once the Fed came to the conclusion that inflation was sticky, they took action. But the beast was off the leash and roaming the streets and creating havoc. It is a fact. The Fed's actions are helping, And the Fed will get inflation under control. They're going to find that leash for that beast. It is not a question of if, it's a question of when. My concern, based on history, the Fed will stay too aggressive fighting inflation for too long, and that will create a new set of challenges. However, those challenges that might occur tend to be exceptional for real estate values. Inflation is going to be the story in 2023. Again, for those that are multitasking, when inflation is high, there is higher mortgage rates. Manageable inflation will normalize home loan rates, and low inflation will cause epic record low home loan rates. As a certified mortgage advisor, I help the families I serve create not just wealth, but generational wealth with the proper mortgage strategy. I have to be transparent. Even with higher home loan rates, buying a home right now is an unprecedented opportunity because mortgage rates are transitory. However, home prices are sticky and they are going up. This is a statement I need to unpack. Let me start by talking about mortgage rates being transitory. In other words, the current rate environment today is not going to be the home loan rate environment forever. Yes, inflation is the main reason that mortgage rates are at a level that they are today, and another reason is because mortgage companies know that inflation will get under control. And they are charging a premium today since there is no long-term servicing value to a loan originated today, because a loan that is originated today will be refinanced in the next 12 to 18 months when mortgage rates go lower. Hence, mortgage rates are transitory. For the people in the back, let me make this point crystal clear. In 2024, the Mortgage Bankers Association is projecting a 30-year fixed to be in the mid-4s, and that's about 2% lower than we are at the time of the recording of this episode of the Martini Mortgage Podcast. Now, here's the challenge real estate at the point that so many are missing. People are confusing real estate activity with real estate prices. As Julia Roberts said it in Pretty Woman, and I quote, "Big mistake, big, huge," end quote. Sure, real estate activity is slower than it has been. However, the slower activity is being compared to the once-in-a-generation volume experienced in 2020 and 2021. From a technical point, we are in a seller's market because there is limited supply of homes for sale. But even being a seller's market, a home buyer has an edge they have not seen in a decade, since most sellers are willing to roll up their sleeves and help. Lower activity represents an opportunity for home buyers today. And you know what else? Home prices are forecasted to go up and up and up. Now, let me be clear. Real estate is not just local, it's hyperlocal. There may be markets in the U.S. that may see a month-over-month decline. But when you look at a year-over-year number, real estate will go up and up and up, and this sentiment is echoed by the most recent home price expectation report done by Pulsenomics. In the most recent report, which was done in the third quarter of 2022, the cumulative 5-year projection in home values is 24.6%. So just at a very high level, a $400,000 home purchased today at the end of 2026, according to the home price expectation survey by Pulsenomics, will be worth $500,000. Everyone is focused on the story of higher home loan rates, and the truth is, Higher home loan rates are caused by inflation. So the real news is inflation, and the Fed will get that taken care of. If you're waiting for inflation to be tamed to buy, you are missing the opportunity cost where you can buy a home today for less than you'll be able to buy a home in the future. I truly believe that money in real estate is made when you buy, not when you sell. And the Oracle himself, Mr. Warren Buffett, said it best when he shared to be fearful when others are greedy and greedy when others are fearful. Now is the time to be greedy, because if you are renting today, your landlord is being greedy. Obviously, the best time to have purchased a home was in 2019. However, the next best time is right now, folks. So you can lock in the current home price and have the opportunity to get a home with the seller participating in the transaction. Now, remember this nugget. The mortgage rate you get today does not need to be the mortgage rate you have forever. When rates move lower, you simply refinance to a lower rate. Wait, did you hear that? Oh, that was the sound of a mic dropping. Yes, inflation and mortgage rates have been the story in 2022, and the developing story for 2023 will be inflation and mortgage rates. But today, the thing that one needs to know, the story that no one is talking about, is home prices. They're projected to keep going up, and even if the Fed's unable to create a soft landing, and let's assume the worst, we are in a pre-recession world today, or worse, we are in a recession, then know this. During a period of recession, fixed assets, and a home is a fixed asset, during a period of recession, fixed assets do very well. My name is Kevin Martini, and I'm a certified mortgage advisor, and I help the families I serve create generational wealth with the proper mortgage strategy. I take a fiduciary approach. Let's connect to explore your options and talk about your questions you may have from this episode of the Martini Mortgage Podcast, or questions about buying a house in general. My direct dial number is 919-238-4934. In closing, thank you for sharing your time with me, and please share this episode with someone you care about.